$32,970. That is not the price of a luxury car or a down payment on a house. That is the price of a single ticket to the 2026 World Cup final. FIFA is no longer just a sports organization, it is a global financial juggernaut on track to generate a record-breaking $11 billion. From dynamic pricing debacles to a 104-match marathon that has streaming giants and host cities in a frenzy, the 2026 World Cup is set to be the biggest financial event in sports history. Today, we're breaking down the revenue machine. How is FIFA pulling this off, and where is all that money actually going? The 2026 World Cup is unlike anything we've seen before. For the first time, the tournament is expanding to 48 teams, resulting in a staggering 104 matches across North America. This isn't just about more soccer, it's about more inventory, more broadcasts, and more ways to monetize every single minute of the game. By the end of this video, you'll understand the three pillars of FIFA's revenue machine, the controversial ticketing strategies, the high-stakes streaming wars involving giants like Fubo, and the massive consumer spending surge that's driving stocks for companies like Amazon. If you want to understand the business behind the world's game, you're in the right place. Let's start with the sheer scale. In 2022, Qatar hosted 64 matches. In 2026, we are jumping to 104. This 60% increase in matches is the foundation of FIFA's financial growth. More matches mean more stadium seats to fill and, more importantly, more broadcasting hours to sell. FIFA's business model relies heavily on its ability to command massive fees for media rights. With 104 matches, the inventory for broadcasters has exploded. This is why we're seeing companies like Fubo strike last-minute deals to bring the tournament to fans in multiple languages, positioning themselves as the ultimate hub for all 104 matches. But it's not just about the number of games, it's about the duration. The tournament will now span nearly 6 weeks, creating a sustained period of global consumer attention that advertisers are willing to pay billions to capture. Now, let's talk about the most controversial part of the machine, the tickets. You might have seen the headlines about $32,970 tickets for the final at MetLife Stadium. This isn't an accident, it's dynamic pricing. FIFA has taken a page out of the playbook of airlines and hotel chains. By using algorithms to adjust prices based on real-time demand, they are squeezing every possible cent out of the market. For the final, lower-level seating has already reached over $18,000, and even the cheap seats on the secondary market are starting at over $10,000. This strategy ensures that the revenue stays with the organizers rather than just the scalpers. However, it has led to what many are calling a pricing debacle, where the average fan is being priced out of the most significant moments in sports history. But from a purely financial perspective, it's a masterclass in maximizing asset value. While tickets are the visible part of the revenue, the real gold is in the airwaves, or rather, the streams. The battle for broadcasting rights has reached a fever pitch. Fubo has positioned itself as a major player here, offering comprehensive packages that include every single match. For investors, this is a sector to watch closely. The shift from traditional cable to streaming is being accelerated by must-watch events like the World Cup. When Fubo strikes a deal to bring the games to fans in Spanish, they aren't just selling a subscription, they are acquiring a loyal user base that will likely stick around long after the final whistle. Media giants are fighting for your screen because the 2026 World Cup is projected to be the most-watched television event in history, providing a platform for ad revenue that rivals the Super Bowl, not once, but for 104 matches straight. Finally, we have the boots-on-the-ground economics. Beyond the stadium walls, the World Cup triggers a massive surge in retail spending. Amazon has already launched its Summer of Soccer collection, selling everything from official jerseys to high-end home entertainment gear for those watching from home. We also see the USMNT economic effect. Whenever Team USA wins, demand for tickets and merchandise doesn't just grow, it spikes. After a recent victory, ticket prices for group stage matches against teams like Australia and Turkey saw immediate, notable increases. And let's not forget the host cities. In places like East Rutherford, the short-term rental market is becoming a goldmine. Property owners are looking at potential 5-figure payouts for a single week of hosting fans. It's a trickle-down effect where FIFA's revenue machine creates microeconomies in every host city. Hit that like button and subscribe. Thanks for watching.